Alright guys, thank you for tuning in. If you're watching this on Facebook, this is where we are live. If you're watching this on YouTube, the link to the live stream is going to be in the description box below. So if you guys want to see this live instead of after we're done, make sure you click that link down below. That way you can join us while we live stream this. Ask questions if you have any questions about the stock market, about investing, about saving money, about how to invest. If you have any questions on what you can do in the stock market, make sure you click the link down below so you can join our group and join all of our lives that we do every Friday around 11:30. Or you can ask them here on YouTube. Just make sure you guys are subscribed. Leave it in the comments down below, and we will answer those in the comments or in the next video. With that being said, here we are. I'm going to show you guys a couple things. So the last time that I posted on YouTube, for those who are watching on YouTube, I did this on April 22nd, and my account was at $2,900. So April was a couple months ago. What was this? July, June, whoops, June, May, April. So about 3 months ago, it was at $2,900. Today, my account is at almost $3,500. So we made about $600 in 3 months, which is not that bad, considering the stock market's been kind of, I wouldn't say up and down, but it's basically coming back to where it used to be. So if I show you guys, oh, don't know what this is. If I show you guys Apple real quick, let me make this smaller so you guys can see. Back in January, Apple was about 100. The highest it ever got was about $145. So it came down and kind of stayed flat, and now it's finally coming back to the highest that it ever was. So Apple's coming back to where it used to be. AMD is working its way there. If we look at other companies like Disney, Disney is basically a little behind on everything that's happening. So when Apple and all of them were going down, Disney was still going up, and now that those tech stocks are going up, Disney is coming down. So Disney's one, DraftKings is another. You can see it kind of has fallen, so we're just waiting for that to come back up too. But that's kind of how the stock market's been and what the stock market does. That's why they want you, or that's why it's important to diversify your portfolio, because well, all this is people taking money out of one company or one sector and putting it in another sector. So basically, what people were doing was taking money out of tech stocks, putting it in stocks like this, or people were investing in Bitcoin or those meme stocks, and it was causing these stocks to go down and those stocks to go up. Now all the tech stocks are going up and all of these are going down because people are taking money out of here and putting it into stocks like Apple. And a couple other ones. There's a couple other ones that have been coming back to life, basically. But that's the stock market. So it's called rotation. So stock market rotation is when people take stuff, all their money, all their investments, and they collect profit out of one sector. They put it in another sector, wait for that to come back up, and then they'll collect their profit from there. And then it's a continuous cycle. So if you want to be that type of investor, then one thing that you would want to look at is seasonality. So what that is it's basically like a chart that will show you which stocks are hot in which months. So June, July is usually a good month for Apple. If you could just go back in time, you can kind of see this is around that same time. August, this is July right here. You can see it's been going up. So right here is February of last year, and it went down just like it did right now. A little bit more drastic. This is a little bit more of a drastic move, but then it kind of went up May, June, July. You can see that right now. And then right here is the same thing. January came down, and now it's coming back up. So very similar in pattern around the same time of year. So you can look online to see. There'll be charts. People have charts everywhere telling you which stocks are hot in which months, which ones are typically their cold months. So you can game plan when you want to collect profit, when you want to buy in. That's one method that you can use. Another method that you can use is just drawing lines like I have here to determine when will be a good time to buy, when will be a good time to sell. And basically that determines, or that shows you where other people are trying to buy and sell at. So just a real quick crash course on these candlesticks, which is what these red and green lines are. These red lines right here signifies selling. So if it's red, that means that more sellers were in the market at that time trading Apple than there were buyers. So Apple, people were buying Apple all the way up to 145, and then a lot of people sold. More people sold Apple than they bought, making it to fall back down to about 130. So that's kind of that's the stock market, buying and selling basically. So one way that you can do it is through stocks, just buying stocks. I'm just doing that with Tesla and ARK. I was thinking about switching from ARK to the SPY just so I can show you guys the SPY, which is basically you can't really go wrong investing in the SPY because it's going to follow the stock market. So wherever the market's following, or whichever direction the market is going, is the direction the SPY is going to go. And it has companies in almost every sector. So if there's a market rotation, you're not going to take that big of a hit as if you were versus if you were investing in Tesla. And then Tesla's part of one of those companies that take those big hits, which actually did happen. So if I show you guys Tesla real quick, I think I pulled it up earlier, but Tesla was up here about $899, almost at 900, and now it's came down to the $700 to $600 range, and it's staying in there. It's been in there for quite some time now. So just making sure that you guys are well diversified. Make sure you're in more than one company. Don't just put all your money in one company. That way when you're down, you understand that you're not going to be down a lot. But if you do really want to put all your money in one company, then just understand there's going to be volatility, which is the market going up and down, and understand that when you're down on your investment, that doesn't mean that you're losing money or that you lost money. It just means that you have to hold on to that stock a little bit longer before you can come back and start making money, which is what we did with ARK and Tesla. I'm actually up 94 cents right now, but I was down for quite some time on here, but because I was buying every single month on its downfall, now that it's had come back up a little bit, we're able to make money a lot faster because we've been buying on the dips. So that's why my account is basically staying here. It stays up in the next in like a $200 to $300 range, or the two to three I could say like $100 range. It doesn't really fall any much lower than like $100 on a bad day, just because I have my money in multiple different things. So that's that. I'll show you guys my Microvision play really quickly. I'm up 14 bucks on this right now, so not that much, but Microvision is actually below 16, which is what my put is at. So with my put, what I'm basically doing is agreeing to buy 100 shares of Microvision at $16 a share if it stays, or if it's below $16 by the end of July 16th, which is 2 weeks from today. So in the next 2 weeks, I will either have to buy Microvision, or I'll just be able to get my $1,600 back and the 114 that I made. I did do quite a couple different things. Let me see if I can pull this up real quick. Yeah, so $906 my account is up, or my account will be up even more if I didn't take any money out. So that's a lot of money, almost $1,000. So basically what I'm doing is making myself another stimulus check. So if you want to put it into perspective or think about it in a way that you can relate to it, I'm paying myself stimulus checks using the stock market. So you could take your stimulus check, you put it in the stock market, make money, make yourself another stimulus check, and just keep that cycle going. So give me about $300 more, and I would have made myself a third stimulus check, or a fourth stimulus check for those who got three. I think there was three of them. So I'm basically giving myself a fourth stimulus check here by investing my money in the stock market, paying myself so I can use that money to fund things, like I said, vacation. I'm using it to pay off debt, all that good stuff. So I do have, why does this keep popping up? So I do have this play going, and then that's basically it. So we'll stay there. What I want to show you guys is the SPY play that I was trying to get into, and the importance of being patient. So let me pull this up. So I posted this yesterday in the morning, basically telling you guys that I want to get into the SPY right here, but I'm waiting for it to hit this line. So just going off of the past, you can see that when the SPY hits this line, it bounces back up. It hits the line right here, It bounced back up. Same here. It came here and bounced up. It did come down very quickly, but it bounced up. And then the next time that it does hit that line, it's well above the last time that it hit the line. So that's why we have an upward trend. So as long as the stock market stays in this direction, you can trade this same exact pattern. And that's basically how the stock market works when it comes to trading, is you want to look for patterns and you want to get in when the pattern becomes in your favor. So unlike the casino where you put your money in the slot machine and then you hit the button and it's just a gamble, and it's not a 50-50% chance you're going to win or lose. It's way less because that's how they have the slot machines rigged. And the same with playing blackjack and all that stuff. You know, you're already at a losing like a losing advantage. You don't have an advantage because the casino has their advantage. So basically what you're doing here is reversing that, and you're giving yourself an advantage. So it's like waiting for the cards to be in your favor before you decide to put your big bet out there, because you know that the chances of you making money are a lot greater than it would be a couple hands ago. So you can't really see this little red candlestick right here, but it's almost at the line. It's very, very, very close. But I wanted to wait until it either hits the line or goes a little bit past it. So what I did was I pulled it up, I posted it for you guys so you guys can see. And here we go. Let me make this bigger. Okay. Alright, so if I go back on here, this little red candle right here is actually this candle. So by the end of the day, I posted this at 6:51 in the morning, so at the beginning of the stock market trading day yesterday, and by the end of the day it came all the way back up to $430. So the candle ended up being green because it came back up from where it's opened up. So it did not hit the line, as you can see, so I did not buy anything. But if I wanted to, if I thought I had a better opportunity, or if I thought this was a good opportunity, or I was like, you know what, it's close enough, I'll get in, I would be up a nice amount of money. Let me just go to the SPY real quick. So I got the SPY. Let me go to trade options because I'm going to be taking my money and using options with it. Let me get rid of this chart. Don't really need it. I was going to look 3 months out, so it's July, August, September, October. And then I was going to scroll up to something that I can afford. So I had about $170, so I could look at something that was about $100. So you can see right here, this one is up 16% just today. So if I would have bought it, if I would have been like, you know what, this is close enough to my line, let me get in now, and if it goes down lower, I can probably buy another one for cheaper. I could have done that, but I wanted to wait till it hits the line. You want to stick to your script because it could hit the line. As you can see, this one ended up going past the line, and if you don't have that much risk tolerance, you're not willing to lose that much the money that you put in, then you want to make sure you're right and make sure that it goes exactly according to plan. So I did not hit the line. I did not buy anything. When it was down here, I was waiting to see if it goes lower. If it would have hit the line, for sure I would have bought that option, but it did not hit the line, so I just waited, and now you can see it's made a new all-time high. So it did exactly what it's been doing. It just did not quite hit the line, but it got close enough. So what this means right here, my first time and second buy, if it hit this white line, this trend that I was showing you guys, I was going to buy one option. So I was going to go in here, spend $100 on an option, and then what would happen is if it went down to this yellow line, then I would have bought a second one because as you guys can see, if I go back, it either hits the white line, it either hits the yellow line or the white line, but it never really goes below those lines and stays there. So I was using those lines as the patterns and indications of this is a good time to buy it. So it did not quite hit my lines yet, so that's why I did not buy, but I could have bought it and I would have made money. So just in hindsight, I wouldn't say get in early next time, because next time it could end up being the one that falls. But what I'm saying is, if you want to take that risk, just understand that you don't want to buy you don't want to put all your money in because it could drop lower, and then that gives you an opportunity to buy lower. And just being able to stick to the script. Don't start panicking. Right now, I don't really feel like I'm missing out because I know that this is going to happen again. It's just a matter of when. So I have $170 that I could have put in right here and just see what happens. But I can wait again. But all this does is just verify that my analysis is correct, and I feel more confident about this now. So the next time that it hits this line, I'm going to feel a lot more confident in putting my money in because I know that it's going to come up, it's going to make a new all-time high, and we're going to make money. So that's all that you want to do when it comes to the stock market and reading a chart. And charting is stacking evidence in your favor. You go back, you look at the past, you see what's been trending. Everybody likes to follow trends. Exactly. So just like in real life, people in on TikTok, what's trending. Everybody wants to know what's trending, what's the hottest new item out there, what's the latest and greatest. How do I get in um, before it basically runs out? So this is the trend that I'm following. I did not buy an option on here yet, so this is the first time I'm showing you guys this on here, just because of the risk that's involved. This is the most buying option is the most riskiest thing you can do in the stock market. So we want to make sure we're careful. We want to make sure we're right. We're confident. We're not just buying something and hoping for the best. We actually have a game plan. We have an idea of what we're expecting. We're waiting for our game plan to set itself up. And while we're waiting, we could be adding more money to our account so that we can put more money in. Or we can just be sitting on the sidelines and just waiting, having that money available for whenever that opportunity arises. That's why on my account I have my buying power. It's probably going to stay here. I'm not going to look to buy too much other things, just so that you know when the stock market, when this does what it does and goes where I want it to go, I'm able to get in, no questions, no hesitation. You just buy it and see what happens, and that's where we're at. So I'm going to keep you guys updated on that just in case it does fall here soon or at any moment throughout the week before our next live stream. I'll keep that in the group. So if you guys, if I do end up buying something, I will post it in the group so you guys can follow along with me, see how that works, understand or learn when I got in and when I got out, how much money I made, how long I waited, all that good stuff. So just make sure you guys stay tuned. Make sure you join the group if you're not in the group yet. It's free. It costs you nothing. If you have any questions, you can ask the questions in the group. Somebody else might have that same question you have. Other than that, make sure you're doing long-term investing. This right here is considered short-term investing because it's less than a year. So if you're going to do short-term investing, make sure that you have a long-term investment somewhere. I don't want you to look at your 401k through your job as your long-term investment. You want to have as much long-term investing as possible so that when you do retire, you have even more money to use. You don't want to be, retired at age 60, 65, and then you're still limited on the things you can do because you didn't really save up much. So, yeah, another thing, as my friend Jonathan's saying, um, long-term investing obviously takes longer. It's longer term, so it's going to take a longer time to make money. When you do swing trading, day trading, option trading, you can make money a lot faster, a lot sooner. Um, but you can also lose money a lot faster, a lot sooner. So just keep that in mind when you do this. Let me go back to, let's say, Apple here. Or let me go to, should I do Apple? Let me do Disney. I think Disney would be a good one. Let me look at the Disney chart. So you can see here, right? Let's say I was following this trend. I drew this trend a while ago. Just following it. I didn't get into anything, but I just wanted to see what happens. But you can see it hits this white line here. It comes up. It almost hits the line. So it did what the SPY did back or yesterday, and then it came back up. And then right here it hit the line and went up. So you could say this is a trend. And it looks like it's going to follow that trend. So what I could do is be like, the next time it hits this line, I'm going to buy it, put all my money in because I know it's going to come back up and I'm going to be rich, right? So if you do this, let's say you do this on here, you got in early and it shot up, you made a whole bunch of money. You took your money out, you waited for it to hit the line. It hit the line, you bought in, and bam, it shot up again, and you're super rich. You made like $700, $800. You feel like the king. You're like, I'm gonna keep doing this until the wheels fall off. And then it hits the line again. You put more money in because you made money, and now look at this thing. It's gone down, it's on a downtrend, and it has no signs of coming back up anytime soon. And now you've lost money, more money than you made. You're probably at broke even now. And that happens in the stock market. This is part of that rotation. So you might there could be a couple things other than just this trend line that would tell you don't get in right now, or maybe there's more evidence of this is a good time to get in. But make sure you have evidence stacked up so you know what you're doing. Don't put all your money in. Only put in the amount of money that you're willing to lose. So if you lose $100 and you like pulling your hair out, you feel like life is over. I'm not gonna trade another option again because I just lost $100. Then don't put $100 in there, because if you're gonna lose all your money. So basically, if you're gonna invest with options, you want to put money in that you're okay losing. You can still have a great day. It's not gonna be a bad day. It's not gonna ruin your day or anything like that. So make sure you do that. Or what you can do is, if you can put your $100 in but you're only okay losing 50, you got to put that stop loss in there so that if it does reach 50, you're going to get out no matter what. You're just going to accept that $50 loss. You're not going to hold on until it comes back to the green, because you don't know if that's going to even happen. So just making sure you guys understand the risks involved with option trading, which is why I waited so long to introduce it to my channel. But I do think it's important to show you guys the benefits and the downsides of everything that the stock market has to offer. So make sure you guys stay tuned. When it comes to the SPY, we're just waiting for that to happen. So just stick around, stay tuned, and I will keep you guys informed in the Facebook group. So if you're a part of the Facebook group and you want to follow my YouTube channel, it's The Investment League on YouTube. Follow along on my YouTube channel. I do post my podcast on there. My podcast basically gives money saving and investing tips, things you can do, budgeting your money, writing out a list of all your expenses, allocating a certain amount to saving, investing, long-term, short-term, emergency funds, all that good stuff. So make sure you subscribe to my YouTube channel. Other than that, if you guys have any more questions, I'm going to give you guys a couple minutes to ask those questions. I'll answer them, and I'll see you guys next week. That's that. Otherwise, have a good weekend. Stay safe. Put sunscreen on, and I'll see y'all next week. Peace.